Alright, what up guys? And in today's video, we're going to discuss whether you should be investing in crypto in 2024. With the new launch of the Bitcoin ETF, there are huge questions about what will happen in crypto's future. Bitcoin crashing over 5% just after the announcement of the Bitcoin ETF really brings into question what crypto could bring. But in today's video, we're going to be discussing what a Bitcoin ETF means, what are the implications for investors, and what it means for the future of crypto. But before we dive in, make sure you hit that subscribe button so you never miss out on any of the insightful content. On Wednesday, January 10th, the SEC finally approved the Bitcoin spot ETF, and they began trading on Thursday, January 11th. But now what is a Bitcoin ETF? A Bitcoin ETF, also known as an exchange-traded fund, is a highly liquid fund that changes prices throughout the trading day just like any normal stocks. It tracks the prices of Bitcoin primarily by holding a large amount of Bitcoin itself. It's very similar to the spot gold ETF, which holds physical gold on behalf of its investors. Now, after the launch of these Bitcoin ETFs, there are a couple things that happened to the market. One is that Bitcoin itself actually plummeted down over 5% the following day after the announcement of these Bitcoin ETFs. And two is that Bitcoin ETFs shattered the record with over $4.6 billion in volume on the opening day. Now, the gold ETF actually held the previous record at a record $1.6 billion on opening day back in 2004. Now, there's a couple of differences between holding the Bitcoin ETF and Bitcoin itself. The main advantage of holding a Bitcoin ETF versus actual Bitcoin is that you're exposed to the price and asset of Bitcoin and crypto without any of the complications or risks tied to the cryptocurrency. And those complications would typically include having your own crypto wallet and having crypto stored on your separate exchanges, which might not have the best security. And unlike the other crypto exchanges where you could have Bitcoin on, an SEC approved ETF is listed on tightly regulated stock exchanges and accessible through brokerage accounts, which are all very closely supervised. This ETF structure also boosts the accessibility of Bitcoin due to the restrictions on some crypto exchanges within the United States, as well as it just being more accessible in general for the general investor. Now, the SEC actually approved Bitcoin future ETFs back in 2021. However, the future ETFs don't actually track the price exactly, as they're very similar to options. They're just a prediction of what the future price of Bitcoin could be. Moreover, the cost of your future contracts can eat up into your returns, which actually made them less desirable for many investors. Now that we've discussed what a Bitcoin ETF is, let's discuss how this actually impacts you as an investor. One of the biggest changes to Bitcoin after this announcement was that it plummeted 5%. Now, many investors are actually scared by this, thinking that Bitcoin will crash after the announcement of its spot ETF. However, that is actually not true. If we take a look at the data, although the Bitcoin price itself dropped 5%, the market volume for Bitcoin on opening day was unprecedented. And this suggests that major brokerage institutions are adopting the Bitcoin ETF as a way to provide other investors the exposure to Bitcoin and crypto. Now, the major institutions who do have Bitcoin ETFs are now in an intense battle for market shares, with many of them slashing their fees to undercut competitors and attract investors. Some have fees as low as 0.2%, while others are waiving them completely for a period of time. So while the Bitcoin price plummeted, the future of the ETFs seemed very, very promising. Now, for investors, this Bitcoin ETF has a lot of merits. Like I mentioned earlier, buying the ETF itself would allow you to access the prices of Bitcoin and gain exposure to Bitcoin. However, you don't actually have to go through any of the risks or complications related to actually owning the cryptocurrency itself. This might be attractive to many risk-averse investors just because you're not actually exposed to the cryptocurrency itself, rather you're buying it through an ETF on a tightly regulated stock exchange. However, the Bitcoin ETF does have some drawbacks compared to holding the actual cryptocurrency itself. The major drawback is that one, it does have fees. A lot of ETFs, not just specific to Bitcoin, have many different fees. Although they might be low, like 0.2%, once you invest thousands or hundreds of thousands of dollars into this specific ETF, the fees do start to rack up annually. Unlike holding Bitcoin itself, which doesn't have any fees. The most fees you'll typically pay on a crypto exchange will probably be the transaction fees to buy and sell the crypto, but other than that, there are no handling or storing fees for Bitcoin. However, like mentioned earlier, you do need to have access to a crypto exchange as well as a crypto wallet to hold and store your Bitcoin. However, the increased accessibility provided by the Bitcoin ETF could attract a broad range of investors, potentially leading to enhanced liquidity in the crypto market. Once again, the Bitcoin ETF isn't just about people buying the ETF itself, rather it's about gaining exposure to the entirety of the crypto market. This could not only attract investors to the Bitcoin ETF itself, but rather to the crypto market. This liquidity not only contributes to price stability for Bitcoin, but makes it a more viable asset class for many different investors. Now in 2024, the crypto markets are still completely uncertain. After recovering from the crash, the prices of cryptocurrencies skyrocketed in 2023. So will we continue to see this bull run of crypto, or will there be a major drawback? No one knows for certain. But one thing that is certain is that these Bitcoin ETFs are and will be a major asset class for the future years to come. With its incredible record-breaking opening day volume, the future of the Bitcoin ETF seems incredibly solid. I think now would be a great time for investors to be exposed to this cryptocurrency, whether it just be 5 to 10% of your total assets. So even though the price of Bitcoin itself did drop by a measly 5%, which keep in mind is not uncommon within the crypto market, there's immense promise for cryptocurrency and the Bitcoin ETF in the future. So my advice to all investors would be try to expose yourself to at least a little bit of cryptocurrency depending on how risk averse you are. At the end of the day, Bitcoin and crypto are just one more asset to add to your portfolio to not only bolster its strength, but also to increase your diversification. I think this Bitcoin ETF shows that there is a lot of promise for cryptocurrency in the United States in the future, which in my opinion is a great sign for all investors who are looking to gain access to crypto. Now speaking of cryptocurrencies, now let's dive into what this Bitcoin spot ETF actually means for the other altcoins. Now within the crypto market, Bitcoin has the highest market share. However, coming in second is Ethereum, which also has an incredible amount of market share as well. And within the crypto market, crypto tokens are typically very highly correlated. If Bitcoin makes a sharp rise, then Ethereum is sure to follow, and vice versa. So it would also make sense that if a Bitcoin ETF gets approved, then an Ethereum ETF might be approved very soon in the future. Historically, the SEC has been very strict on cryptocurrencies and have refused to accept them into the stock exchanges. However, now that the Bitcoin ETF has been accepted and approved by the SEC, this sets a precedent for other altcoins like Ethereum to also have their own spot ETFs. Following the Bitcoin ETF, Ethereum is most likely the next candidate, as they are both already being traded on the CME or the Chicago Mercantile Exchange, aka a futures exchange. However, outside of Ethereum, the other tokens do have major hurdles to overcome, as the SEC might not see them as regulated as Bitcoin or Ethereum. However, this exposure to cryptocurrency through the Bitcoin ETF is a major step for not only the retail investors, but also major institutions who might be wanting to invest into more smaller and liquid assets outside of just Bitcoin and Ethereum, also known as the other altcoins. This Bitcoin ETF not only creates a way for investors to access this asset within a typical stock exchange, but rather it allows them to be exposed to the crypto market as a whole. I think the Bitcoin ETF will attract more attention to the crypto markets than ever before. However, for the crypto market, a spot Bitcoin ETF is a huge win, boosting the legitimacy of cryptocurrency as a viable asset within the US. This Bitcoin ETF approval also came during a massive tug of war between the SEC and the crypto industry. However, the future of cryptocurrency in the United States seems very promising. So in my opinion, I believe that every investor should take advantage of this amazing asset and add it to their portfolio. Overall, I believe the spot Bitcoin ETF approval is amazing for the crypto industry, as it not only allows retail investors to gain exposure to this cryptocurrency through the ETF, but rather it leads to more exposure gained by the crypto market as a whole. And this could be a major win for all the different cryptocurrencies out there outside of just Bitcoin. It could pave the way for more innovative financial products and instruments centered around digital assets. As the crypto market becomes more integrated into traditional finance, we might witness a shift in perspectives in how society will interact and deal with cryptocurrencies. In conclusion, the approval of this Bitcoin spot ETF has the potential to reshape the landscape of crypto investments. It is a pivotal moment that can bring in new investors, market maturity, and contribute to the long-term growth of the crypto environment. But as always, do your research and determine yourself whether crypto is a good investment for you and your portfolio or not. And if you're interested in how you can gain more exposure to crypto, make sure to subscribe to my channel and check out all my other videos. Thank you for watching, and until next time, happy trading.